Hello, this is Doc Severson for Ready Set Trades. Trade of the day for Tuesday, the 8th of December. Today's trade of the day is on a SPAC, which is called BFT, or phonetically that's Baker Foxtrot Tango, for Bill Foley's acquisition company. You can read more about this in our 10X Tribe SPAC report by Charles by joining our 10X Tribe for free at the link below. Now, this pop to the upside started yesterday based on a rumor about this merging with Paysafe. So the problem here is that that's yesterday's price, and today in the pre-market, it's already running above 13. So if we're going to trade the stock with a $1,000 account, we have to make sure that we keep the risk to any one specific trade to less than or equal to 2%. That is the golden rule of risk management when it comes to trading. Keep your losses small. And so don't completely blow out your account on one single trade, which is the second most mistake that I see retail traders make. If you're curious, the most common mistake is entering a trade without a stop or any kind of an exit defined. So we have to keep the risk on this trade to $20 or less. Again, if we're trading a $1,000 account, and you can extrapolate that out to whatever your account size is. So with the speculative nature of SPACs, I think it's best to assume that your initial investment could go to zero. Perhaps this SPAC is never going to find a candidate to merge with, which is unlikely, but it could happen. So let's just assume that if we put that $20 in, it could go to zero. So if that's the case, if you buy in at $13 per share and you have $20 to risk, that equation means that you can buy about 1.5 shares. And you've defined your risk to $20. So no matter what happens, you're never going to lose any more than $20 if this goes to zero. Okay, so that's one way to trade BFT. That's one way to get on board with BFT, is just to ape in at about $13 a share. However, there's another way that we can trade BFT because of the fact that it's a SPAC. We also have what are called warrants. And we can trade warrants with a little bit more bang for the buck. You can see that these are running about $3 per warrant today. And we can actually go out there and chart the warrant. So you can see that the warrant runs pretty much one-to-one with the underlying stock. It's kind of like a long-term call option without as much complexity as options. Now, make sure your broker does offer you the ability to purchase warrants. So in this case, if we still go for that $20 of risk that we have for a trade, and if we assume that these could go to zero, we're going to divide that 20 by 3. And what we're going to find is that we can actually purchase about 6.67 warrants. And since we can't go fractional, we could go up to 7 warrants, and that would risk $21 or roughly 2% of our account. If we don't have options available to us, the next best bet is to use the warrant as a leverage replacement for buying the stock. It gives you more bang for the buck, which is important with SPACs. That's it for today's trade of the day. We'll see you in the next one.